Hello, I'm Bernard Hickey from Eurostoxx and welcome to 90 at 9. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news of more turmoil on European financial markets overnight. There was barely disguised panic in the Spanish and Italian stock markets as short selling bans were imposed in Spain on all stocks and in Italy on banking and financial stocks. The European stock market overall fell 2.6% overnight, and as we speak, the Dow is closing down around 100 points at 0.8%. Spain's stock market was at one point down 5.5%. That's heading into crash territory. Remember, it fell more than 5% on Friday night. Italy down 5% at one point. Now, Spain eventually closed down 1.1% and Italy down 2.8%. But that's only after those short selling bans were imposed. They are signs of panic in financial markets. Now, the New Zealand dollar fell around about 1 cent against the US dollar overnight to 78.9 US cents. It even fell versus the euro. That's a sign of severe risk aversion on international markets. Now, all this is because of more concerns about Spain and the risk of a breakup of the euro. The Spanish 10-year bond yield, which is closely watched, rose to a record high 7.56%, and the spread to 10-year German bond yields rose to 643 basis points. That is indicative of capital flight from southern Europe to northern Europe by people who are worried that a breakup of the eurozone would see their savings devalued into another currency. As if to prove this, the German 2-year yield fell to a record low minus 0.08%. People are paying the German government to look after their money. Even the Italian 10-year bond yield up to 6.34%. And that was because bank shares were suspended. Remember, banks in Italy will take the hit if there's some sort of restructure of debt. The US Treasury bond yields hit record lows overnight. The 10-year 1.44%, the 30-year bond yield 2.47%. Amazing, really. And that's indicative of a flight to safe havens. And because of that, fears about slowing global economic growth have seen the oil price fall by the most in a year. Brent fell 3.3% to $103.3 a barrel. What does this mean for New Zealand? Well, it means lower economic growth and lower interest rates for longer, and eventually pressure on New Zealand's jobs market. Remember, Australia is slowing too, and its mining sector boom is expected to finish within a couple of years. I'm Bernard Hickey. That was 90 at 9 from Interest.co.nz.